Hey everybody, Art Wood, Art Wood Mortgage Team, your favorite mortgage guy on the planet. If you didn't know, just ask me, I will tell you. Continuing our series of alternative lending, and I do this for real estate agents to say, hey, there's more than just one way to skin the cat for their clients, but also for the common public out there looking for loans. I mean, there's VA, there's FHA, there's conventional, there's all the normal stuff, your tax returns and all that stuff. But this is different. So number one today, we're going to start off with DSCR. Say it with me, DSCR. It's a debt service coverage ratio loan. Now what that is really a no-doc loan, but you can only do it for an investment property. So you don't have to provide tax returns. You don't have to provide pay stubs. You don't have to provide W-2s, all stuff. You basically just have to have the mortgage payment be less than the market rent payment. That's it. Now, you got to have decent credit, obviously. But that's it. If you have decent credit, you're putting down at least 20%, and the mortgage payment is less than the proposed rent payment. Now, you find that out by a couple of ways. The biggest way, and you always have to have an appraiser come out, they're going to give you the value of the house, but they're also going to give you the market value. And there's some ways, if you're already renting it out, you own it already, and you've got a lease and can show that you've been collecting more than that. There's some guidelines around that. But for the most part, to make it simple, keep it simple, stupid, right? For the most part, the appraiser comes out, he says the market rent is $3,000, your mortgage payment is $2,500, you're good to go. Now, when you get into some of these alternative strategies, they are going to be higher rates and higher cost than traditional financing. So you just got to go in just knowing that. Like, for instance, with DSCR, you're probably looking maybe at a point higher, unless you throw a prepayment penalty on there, which typically those come with 3-year prepayment penalties, and then the rates come back in line a little bit, but obviously there's the prepayment penalties. So you just got to have a strategy, a mortgage guy or a mortgage gal that you can strategize with. And again, on that DSCR, it's only for investment properties. So let me know how I can help. We'll come back with some bank statement loans, with some P&L loans and other stuff, but I'd love to turn your mortgage into a work of art. Take care.